Hello, everybody. Welcome to the Misfits Happy Hour with Steve Hammer. Today is the 27th of April. It's been a wild week on the markets. We've had one of the worst Aprils on record, and it's also, I think the markets are down 6% in a week. So it's been, if you've been trying to surf the markets without a rule-based program, you're probably feeling pretty rinsed, as they would say in the surf culture. And today with us, we have an extremely knowledgeable and disciplined and successful and experienced gentleman, Mr. Steve Hammer. He has a software program company, community, actually a beautiful community of people who are smart and very curious and risk takers, aggressives, and they all have opinions, and they're all, I would suggest, very sophisticated in respect to their outlook in the markets. So we're pleased to share a beer or whatever it may be with Steve Hammer, who's, I think, been in the business as long as I have, which makes him an official dinosaur. So welcome aboard. and
I got neck, my neck's kind of like a lizard these days,
right, just you don't wear shorts often anymore at the gym, right? It's like, don't want to see the sagging skin around the
Oh
knees.
no, I don't have to. This is the only part of me that's turning into, and
How
this happened after I got the vaccine. So
how often do you go to the gym still?
twice a week, Tuesdays and Thursdays.
And is it a particular regimen? Is it
Yeah, my trainer is a licensed physical therapist, Evan Pratt. He runs Apollo Fitness here in Santa Barbara, and he trains some pretty outrageous folks.
I was gonna say, does he moonlight in a dungeon?
Well, he handles, there's a big polo crowd here in Montecito, and he handles all these top polo players. And when it's season, half of them are in at the gym, and some of these guys are, like world famous,
Argentines, right? They're Argentines,
yeah,
right? And they're the dashing, good-looking guys who steal your wives when you're not looking.
Pretty interesting stuff.
Yeah, I mean, polo is a rare breed, and they travel. That's the kind of money that we don't have, or I don't have. I kind of grew up around it, but
they're professional sportsmen, so they're like, they got budgets and handlers and all this stuff.
oh, they even have people to walk their ponies.
Well, they've got quite a few ponies.
Yeah.
And I've asked questions about, well, how do you move those horses around? There's $1 million worth of horses. And very carefully.
Right. And best I can tell, there's no sort of professional league. There's no sort of, I mean, the schedule seems to be, at least on the East Coast, it's all summertime. It seems very, very lightly attended. It's not like a soccer match or anything. And it doesn't seem like there's prize money. Or is there prize money in polo?
There must be. I've never actually I've been to the polo grounds, but I've never been to a polo, and I'm not particularly interested in that.
Yeah, I just found it. The field was too big. The ball was too small, and they were just riding. It looked like swinging giant croquet mallets. When I grew up walking horses right at the Hunt Club in Fairfield in Connecticut and Westport, Connecticut. So so you go to the gym twice a week, right? Is it just cardio? What do you do to burn off the stress besides play music?
I play music to burn off the stress, and I play golf to eliminate stress completely from.
Yeah, I mean,
golf is the best way that I've found. I mean, I crank up the guitars back there, and that helps. But there's nothing better than a good walk and chase a little white ball around.
do you want to show us your nicest guitar, your favorite guitar?
Oh my gosh.
Yeah, come on, break it out. Let's see this
No.
thing. No. Oh, look at them. They're in the back.
There's a bunch there.
Excellent. Wow.
There's a bunch there.
Have you had a chance to play them in a proper venue?
Oh, I played in bands from the time I was 15 years old until I guess about, what was it? maybe a year or so before the pandemic. I was in a band for quite a number of years, and it just didn't make any sense to stay with it. So I started doing stuff on my own.
Yeah, it seems like all my friends are the same way, right? They're recording virtually or with very rarely do they get together and play. It's almost as though.
No, that's not an ES330. I don't have the only Gibson electric that I've got. Actually, I don't have any Gibson electrics. I've got Depression era Gibsons.
Wow.
That's a 65 Rickenbacker, and I have some other. I have 21 guitars. But no, that's not an ES330.
Are they affected by the humidity?
Yes, very much so. And that's a humidified. Actually, here in Santa Barbara is the best guitar environment in the world, basically, because you want to keep a guitar at about 49 to 50% humidity, not let it go below it or let it go above it, because the wood swells and contracts, and that creates cracks and it makes the neck warp.
Have they kept up with inflation? The price?
Guitar values go up and down. One of the few people I follow on Twitter, Isley, is responsible. He's this billionaire guy that happens to like buying guitars, and he's got amazing collection, and some of that has inflated the price. But guitars go up and down like anything else. You know, when someone wants something as a limited supply, it's just like in the stock market. We consider that supply is a constant and that it's demand that changes. So when you really think about that, you know, since stocks have a float, and except for a short interest that would be attached to it, the supply is basically finite or fixed, fairly fixed, and it's demand that changes. So it's the same thing with guitars. You know, when everybody was buying Burst Les Pauls, you know, the early 60s, you know, I had one that I paid $350 for. The guitar now is worth $350,000.
Check that out.
And you know, it's my experience that thoroughbred racehorses have the best investment return of any vehicle. And then outside of that, if you hold anything long enough, it goes up in value.
Except silver.
Yeah. Well, you know, they say that vintage is the new rage, but it's only people that don't get better with age.
I see, I hear conversations I live in the East Village in Manhattan, and I hear conversations between many of the college kids, and they go along the lines of, if you're not thrifting, you're just not in the game. And so
What is thrifting?
Thrifting would be looking for clothing that's secondhand and making it fresh and stylish in your own way.
Well, that's an old, people been doing that for decades.
Switching gears just a little bit, the software that you have created and the community that caught the top beautifully at 4506 while you were on vacation. It was the cleanest entry into a short position that paid immediately huge dividends. And I just wanted to say thank you for instilling your knowledge in the community so it even functioned while you were away. It was really cool to be part of.
That's our goal, is to make people self-reliant using the tools that I've developed and the processes that I've used over 4 decades to become successful very quickly in a very narrow range of trade types, specific setups. And the goal has been, you know, anybody can follow a wavy line around. But today was a perfect example of how our methodologies, and if I get too much into marketing, you know, because I don't want to sound like I'm pumping our stuff, even though I'm pumping our stuff, but I'm pumping our users is really what I'm doing, because, you know, people will only use a product if it's useful to them, and if it's providing a value for them. In today's action, you know,
Mark,
we knew we were going to be buyers into any dips today. And we knew that the ranges were expanded. We're range traders, folks. We're not surfing stock prices. We're looking for specific types of setups that repeat themselves over and over again. And then we teach people through our chat rooms to recognize, watching the software, you know, watching the price action go up and down. And just like with you, Chris, it took maybe a month before you were able to recognize, oh yeah, here's the trade type number one divergent long setup, right?
yeah, yeah, I can vouch for it. Just a quick backdrop setup for what Steve's talking about. The market came into this morning extremely oversold, maybe as a function of all the banks having to hedge their exposure to Mr. Musk's bid for Twitter, and it appeared to be dumping something onto either, whether it was dumping Twitter stock or dumping S&P futures to hedge their exposure to his I would assume line of credit. Anyhow, however the market got there, the market at the close of yesterday was extremely oversold by Steve's measures. And so that's how he arrived at the story from which he just told. Today, the market closed flat after mostly working off an oversold condition, which is not exactly, I mean, typically a flat correction from an oversold condition is not always considered bullish, right? Steve, I was always taught that a crash occurs from oversold condition because the prudent shorts have covered, and that only leaves the quote value guys out there buying them because they think it's cheap. And then all of a sudden, you know, if the shorts are already covered and the value guys are long and some bad news hits, there's not a bid to be had. And that was the mantra on the floor for years, that that crashes occurred from oversold conditions. And
Well, that's a complex question that requires a complex answer.
get after it.
You sure you want to get into this?
Mm-hmm.
Okay. So we teach, I've been at this for 45 years, and I started as a private investor. A 92-year-old man, Harold Lang, taught me about investing and trading. He taught me how to read the tape when the tape was physically a piece of paper coming off of a printing machine. And as a stockbroker, later as a stockbroker, later as a money manager, what I've seen over 4.5 decades of doing this is that these complex narratives, as you just described, that presume that if this happened, then this would happen, and this would happen, this would happen. And it always comes to some point of having to create some reasonings that you would say, okay, well, if that explains that, then this goes that. Well, the problem with that approach, and I learned this a long time ago, more than 3 decades ago, is that it's a never-ending cycle. And can I share my screen? Is there a way?
Sure. I would assume I am. Yeah, see there at the bottom, it says there's a green button. It says share screen.
Oh.
Try that. No guarantee.
All right. Can you see that?
I just have you. No, currently all I have is your face through your webcam.
All right. Hold on. Share your entire screen. Yes.
There you go.
So now you see this thing?
Yep.
Okay. So a guy that I knew, Ian Notley, was a market technician that most people never even heard about because it costs the minimum of $100,000 a year to get his service. And he ran a very large database called Yelton Fiscal. He's passed away. And Jonathan Arter has maintained his, who's in Connecticut, has maintained his discipline. And the Notley database contained every single security on every single market in the world. And he came up with this little graphic that he shared with me, which I've been sharing with the world since I started. But he described that this is how most people, by following narratives, end up trading the market, is that prices fall a point or two in a day or two, and every trader turns bearish on the market and sells stocks down here. Then prices rise a point or two in a day or two, and every trader trades bullish and buys back stocks up here. Then blah, blah, blah. And it goes around and around and around and around. And the thing that I learned, let's see, does this now turn off the share screen?
Let's see, we'll get there.
Oh, I see it. Shop's there. Okay, are we back?
Yep.
Okay. So he impressed upon me that you needed a measurable and repeatable method of ascertaining trends on multiple time frames. And at the time that this was in like 1990 or so.
Can you say that again? A repeatable,
A repeatable and measurable way of determining what the trend is over multiple time
frames, right? People, everybody out there should have that tattooed or write it in the mirror that you look in the morning.
So what we have is all of the systems that I have. The one thing that has all been, and I give no, I don't try to claim that any of these, like the delineator is a derivation of the McClellan oscillator. I say that on the very first line, and I've always maintained that. And Jeff and I met Sherman McClellan back in, I think it was 92 or 93 in Denver at a technical analysis conference of people, Williams was there and all these other guys were there. And Ian used to go to their conferences, but he didn't go to that particular one. And, the McClellan oscillator is a public domain algorithm. And the folks over at McClellan do a fantastic job. They're very, very talented people. And for what they do, they meet their objectives. And the great thing about the market is that there's not any one right way or wrong way to do something. There's only something that can fit with what you can do. And if you go to college and get a degree in something, you're going to approach the market from a completely different point of view than you and I were, or most of the people that are listening to us now.
Yeah.
So to get back to the point of your question, creating these complex narratives just goes around and around and around. And typically, well, it's not measurable, it's not repeatable. So what I did was take this notion of multiple time frames to know what the long-term trend is, what the intermediate term trend is, what the daily trend is within 1 minute. And you're always superimposing the shorter time frame against the longer time frame. And we do that all the time in other systems that have periodicity to them. Okay.
I see that. And from what I've heard, just as an aside, is that the longer time frame will win in the longer term. Just as an aside, not to interrupt.
Right. And you need to know where you are on that curve, of course.
Yes.
And if you have a perspective from a distant measure, then you don't really know. It's like if you look at climate models, for example, it's a small little bit of time relative to billions of years on the earth. At any rate, so coming into today, when people say the market was oversold or overbought, that is typically an emotional response to the duration of a particular directional motion of the market. So if something goes down for 5 or 6 or 7 days in a row, certainly after the 8th day in a row, people are going to say, "Oh boy, it's oversold." Well,
right.
we don't use that term because it is neither oversold nor overbought. It's simply extended or overextended. And for us, that is a measurable and repeatable mathematical relationship that we calculate. And when you know that energy gets wound up and energy gets released, And we don't care what the reasons are, because at the end of the day, you'd never really be able to confirm or deny anything that we would come up with, because there are millions of participants in the market, millions and millions and millions, and they're all doing different things for different reasons. And to assume that there's one overlying reason that is controlling such a significant portion of the market money, that it could actually make the market go up or down, is absurd.
Yeah, the why element is not relevant.
The market is the purest social network that there is. And it always has been, because the process of buying and selling, whatever it is, a stock, your car, guitars, a baseball, whatever it is, it's just a function of supply and demand. And a product, in terms of the market, it's simply a function of demand, because the people that are in the market, like when you go to the store, for example, you got to buy food every single day, but there's no requirement that you buy stocks every day. So that's why the demand keeps moving in and out. And the monies that are in the market, the big generational mutual funds, they never leave. They're always there. They measure their performance on a relative basis, knowing that their goal is to replicate an index. And whatever the index does, their fund has to do. And that's it. That's their goal. And the thousands of people that work in those areas, that's what they do. And the last thing that they're doing is risking their money or their capital to try to hoodwink retail into thinking one thing or something else.
Right?
Retail,
Yeah.
they got the ability of coming up with those things by themselves. They don't need any help.
I can verify that from my conversations with the kids who ran the Columbia Endowment Fund in 2008. In real time, I asked them if they were selling. They said, we're too big to sell. I said, what are you doing? They said, we're buying it the whole way down.
Well, it's just like, so one of the reasons why today was such a great day for our people, not for all of our people, I won't say all of our, I got to check that word back. Some people didn't trade, so I'm sure some people lost some money. Patience and the discipline of sticking with a process that it's very simple for people to actually do. I mean, if I always like to use the driving analogy to illustrate what day trading is like. I'm not talking about, when I say trading, I'm always talking about over a 1 minute set of time bars, because I've learned in teaching people over 20 years how to trade and use the software. I found that if I can show them these same patterns on the 1 minute, which repeat over and over and over again during the course of a day, it's the same pattern at 15 minutes or at a daily. You just have to change the amount of time that you're looking at it. So if you're trading a portfolio, for example, over a period of weeks and months, assuming you have target levels set for various positions that you have, you should really only look at the portfolio twice a day. And one would be at about an hour after the open, and the other would be about an hour and a half or so before the close.
Right.
Because anything that you're going to be doing, these big mutual fund portfolios, for example, which are trillions of dollars, trillions and trillions of dollars, they have these portfolios that have 1,000 issues in them, hundreds and hundreds, sometimes 1,000 different issues in them. And their goal from a portfolio perspective isn't to be a stock jockey, it's to have the dispersion of return be statistically dispersed over the majority of their positions. So that if the market does A, they're going to do B. If the market goes up by this percentage, their portfolio is going to go up by this percentage. If it's going to go down by this percentage, it's going to go down by that percentage. And they to keep those correlations like that, if a stock is going up in value, let's say the entire rest of the portfolio is flat and that stock goes up in value, then its weighting is going to be different now relative to the whole portfolio. So the portfolio has to sell a little bit of those shares as it's going up, because if it were going down, the percentage of ownership would be decreasing, not increasing, and they need to keep it at a particular level or within a range. So they're always going to be selling some of the stocks that are going up, and then of course they've got to add positions to their stocks that are going down to bring their weightings up. So they're constantly buying and selling. And the burst monitor that we use during the day, I think you're running that, aren't you?
I have, and I've turned it off because it's too much information. I'm currently using the chat, the journal, the accumulators, and the delineator.
Right. Well, the monitor will,
which is, by the way, the monitor is genius.
that actually Jeff came up with that in 2010, right after the flash crash.
And the Reaper thing is also very cool.
That was something that we had back in like 1990, or I guess that was maybe 2001 or 2002.
Do you want to explain the Reaper to people?
The Reaper. Don't fear the Reaper.
How did you come up with the name the Reaper? I mean,
Jeff did.
I mean, you need a better marketing arm.
I like it. If you notice, some of like we've got pictures of the Grim Reaper as the icon, and then on one of the other ones, oh yeah, and the accumulator launcher is a picture of Gene. What's his name? How come we can't remember that? Gene Wilder.
So for the people who are listening, the Reaper is a sector weighted version of the internals, I believe. Is that a correct interpretation?
Yeah, it looks at market breadth in a very specific way across a range of, well, we do it across, I guess it's 8 or 9 sectors, and we also do it across various different ways of looking at the S&P and the QQQ indexes.
Directly related to their weighting of the, or the how much they can.
Some of them are right, weighted, and what's interesting about it is that we have this notion that 1,000 signal weight equals about a 1% move in SPY. It's different for QQQ. So we have this term we call parity, signal weight parity. And back in when the market breadth has always changed, because there's always been more issues coming to market every year.
Yeah, what is the number now in there? The total of the breadth, is it like 4,000?
I think there's 9,000 securities on the market, but depending on which exchanges you're looking at, which markets you're looking at, that breadth number could be could be 12 issues.
And do the utilities have a, and the preferreds, like the preferreds never really trade, right? And so
well,
I
it's
guess
not a function of them trading. It's that whether they trade or not isn't.
it's just their quote. The quote, if they're quoted positive, then they count as an advance.
No, price would have to be a positive number.
Okay.
It's up shares minus down shares.
Right, for sure. Like I remember when they were the preferreds were correlated to the bond market. So if the bonds were up, we'd sometimes get an inflated signal weight or a positive breadth number because the bonds were weighted, or because the bonds were higher.
Well, they're a fixed income investment, that has a interest component. If you change the underlying interest rate, you're going to change the value of so.
Right, for sure. But so the Reaper, which is horribly named.
We can, once you get used to looking at it, it will tell you whether you can move through some of our ranges or not, or whether, like today, for example, when we got up to the Chevron range from yesterday, we knew there was going to be resistance there, and we knew that we had to have signal weight somewhere around plus 1,500, and if cycle momentum was over 100, we'd blow right through it. And we got right up to it, and then I don't know what, because remember, we trade in a news vacuum, folks. We don't, anything that happens in the market is going to be reflected in signal weight, and we're going to pick it up on our reapers. We're going to pick it up especially on the burst monitor, because if there's some real activity going on, it's going to be programs, and the burst monitor enables us to see whether they're buy or sell programs and how big they are, how frequently they're coming in, whether they're leaning on the sell side or leaning on the buy side during the day, and when that changes.
Lately,
So
we've seen days where the breath goes from positive 2000 to negative 2000. That's kind of a new development.
no, the only thing that would make that, I think we only saw that happen once, and that had to do with the only thing that would do that would be some exogenous event. But today we had a pretty strong reversal in signal weight from over 15, and it hit at a high 1687.
Yeah, that had to have been just for a fraction of a second, because the market
No,
just.
it was there for quite a while.
Uh-huh.
And then it had reversed down to zero again, which is unusual to see that happen in a 30-minute period. And then it reversed again, which is, again, what we expected, because we expected any kind of downside moves today to resolve right back up again. And the more vertical the declines, and if you were watching the SPY ranges again today, they were spot on. The actual low of the day at 1033 occurred right on the Chevron level at 4:17, which has been there for a day.
One thing that I learned in Steve's school was that vertical ranges trade out. Also, the final bar, if it's the final bar of the day, if it's a big move in a single direction, it generally trades out the following morning. Is that correct?
Yep.
And those are things that in my 40 years on the floor, nobody ever told me. So thank you for that. That was really smart.
Well, you just got to look. It's all right there. Let me show you. An interesting thing. Okay, let's go back. I'm glad you said that, because this is really important for people out there listening that might be thinking about, what we're doing. Is that perspective? The perspective that you have on whatever you're looking at is so important, because if you change your perspective, you change what you're looking at and how you're looking at it. So let me share something and show you something here. So this picture, no, not that one. Not that one. Hold on. I got to get my files here. Okay. People that have been in my trading schools, what do you see? Black bats or white angels? Well, most people, when they look at that image, the first thing that they see are the bats. Mm-hmm. And then you see the white angels. Some people will see something different. Some people will see them both. But the point of this image is that there are complementary and mutually exclusive patterns in nature. That there are some patterns that you can see that make it impossible for you to see another pattern. So when we look at our charts, most people, when they look at their charts, have got all these wavy lines going in all directions, right? And they got these parallel trend lines, right, that are going this way, and then they change them like that. So I've never used those kinds of things, because we use horizontal lines because we are range traders. So we define what the ranges are, and price will continue to trade through that. And if you look at that for a period of time, and this is why I say that trading right now is easier than it has ever been in my 45 years. And it has nothing to do with how much it's going up and down. That just gives us opportunity. But the fact that there are these repetitive behaviors, people are looking for the wrong patterns. And that image that I just showed you, the MC Escher image that shows complementary and mutually exclusive patterns, that those things that I train people to see are things that you're actually being trained not to see by looking at the charts you're looking at. And that's what takes people a lot of time, like the notion of a crossover. We always like people, oh yeah, wait for it to cross over.
Who are these people who follow
I
crossovers
want
and
to
moving?
cross.
Who are these people? Like, someday it would be super fun to just tell people, have a webinar on what tools don't work.
Well, if you're not making money, I think you got a good idea what they are.
Right? Like, I figure, you've helped so many people over the years. We should just start with one, like financial literacy. Okay, these are the tools that don't work. And then from there, you're on your own.
Well, pretty much the easiest thing for most people to do is to turn on CNBC and watch those guys and just do the opposite. Wait for them to get giddy as hell and sell, sell, sell.
Right? With a reason, with a valid tool, a curated set of tools, right? You cannot fix a car with a hammer. You need other tools.
And when you see markets in turmoil, that's when you should
right.
start interested in looking for some longs.
Shifting gears a little bit. Have you seen any live music lately? Have you been to live shows? They're just getting cranked up here in New York again.
Well, it's funny that you say that because in December, on December 10th, I'm going to be the guest conductor of the Santa Barbara Choral Society singing the Hallelujah Chorus along with the Santa Barbara Symphony Orchestra, and I get to be the maestro.
What are you going to wear?
Well, I'm going to wear a tuxedo, and I'll tell you, when I was in, I'll have to get some tails, I think.
Yeah, right. Like, where are you going to find a tux with tails? Like, in the supply chain, there's probably not a lot of.
When I was in Tucson, I went to a music store and I saw these up on the countertop. I took a picture and I said, I need to get those batons. And my wife, Amy, she said, well, what are you going to need a baton for? You're not a conductor.
Now you are.
Now I am. Now I
Right.
am.
Now you are. Right. Like, I
Yeah.
mean, don't you? It's one of these jobs where you have to be super theatrical as a conductor.
Well, I'm kind
Okay. Good luck with that. Is it going to be televised?
of, I hope.
And so, but have you seen any good shows? Have you seen any? I mean, obviously, you are a connoisseur of music. Have you seen anything good lately?
Well, I saw the chorus sing on Saturday. They were singing a Beatles medley, which was kind of,
Really?
yeah. What else did we say? I'm going to go to this on Cinco de Mayo to Burnham Wood to listen to this really large mariachi band. I love mariachi bands.
I saw Luis Miguel with the solid mariachi. I mean, that's 40 mariachis or so.
That's a lot of trumpets.
Yes. And so,
I love this.
do you have a hat? Do you have a mariachi hat or an outfit?
Not yet.
I mean, that's pretty serious. That's about as that's like the tux and tails of Mexico.
We can just put on a serape, wear one of those hats.
Let's see. The New York music scene is cranking.
Is that where you are?
Yeah, I live right across from the Fillmore East,
Oh, really?
literally across the street from the Fillmore, what
And
used to be the Fillmore East.
what is that office you're sitting in?
I'm sitting right next to where the CME on right here at the World Trade Center. I was on the floor of I was on the floor of the New York when I started, and then I moved over to the COMEX and NYMEX, which is at 4 World Trade. Then the Trade Center came down, and then we moved literally across the street on the river where the NYMEX had built the building. And so when the NYMEX closed, a group of traders, we all decided that we're better together than apart. In other words, what do you think of this? And another trader would say, maybe you should rethink that. And so this is a workspace in the American Express Tower at Brookfield Place, right next to what is the CME, former NYMEX and COMEX building. I can see it. It's 100 feet away. Should we say I'm co-located to the servers? And so, but what the nice thing is that there's a lot of metals traders and crude traders who I've been having happy hour with for years.
I've known a few crude traders in my time.
Yes, right. I always said crude traders should moonlight in a dungeon. That's just the nastiest markets ever, ever. Hey, what about your January stocks? Anything that you like in your January stocks that are doing, that are having a hard time that are,
Yeah, well, that's down. That portfolio is down 30%. I've got like a $500,000 loss on
eesh.
it. It's a good experience for those people in our chat rooms that are doing it. I know a bunch of people bailed, but which is fine. You got to understand I've been trading growth style. Well, shouldn't say trading. I've been investing in growth all my life, starting with cell phone operators before there were cell phones in 1983. And development stage biotech, development stage computer software, hardware, all the modem makers, remember the product cycles with the modems every 6 months, first is 900 baud, then 1200 baud, then 2400 baud. Ooh.
Right?
Then
Oh, the
96.
pink iPod's going to make me happy kind of thing.
So these companies, you get them as development stage companies, and I learned like 35 years ago to do this. It's called the zero cost strategy, and that is you find when new companies first come public or in the specs that we've had. Oh, and I got to circle back to the breath question that we never
Oh,
finished.
right. Yeah.
Um, you get new companies that come public, like IONQ. Like I'm into the newest new right now is quantum computing, and it's going to be a big thing because they're going to get it all figured out. It'll work. I still don't fully understand what a qubit is. I kind
I
of think I know, but I cannot describe it to somebody because it's, binary is either 1 or 0, right? It's either this or that. But a qubit, it could be a 1, but it might not be a 1. It could be a 0 and it might not be a 0, or it could be both. So
quantum.
So what it does is it calculates whatever it's calculating from all of the various permutations of perspectives of what the quantum state could be, which is a lot, how many anyway. So they come out, they start trading, you get a big spike on them because people don't know what they are, and people always pay up for what they don't understand and demand a discount for what they do. So you're going to get a tremendous volatility in these stocks on a point basis. So you trade them. So if you buy one at 20 and it goes to 40, you sell half your position. You keep that half position, you stick it away. Now you've got your original principal again. You go buy another one.
Yep.
You wait for it to do that. You come out of it, or you trade it. You buy a little bit and then you trade it, keeping for a point here, for a point there, 2 points here, 50 cents there, whatever it is. And you keep that profit in shares, in free shares, and you put them away. Most of you guys out there and women out there are in your early 30s, maybe early 40s, but you've got decades in front of you of your careers.
And I'm sorry to interrupt, with the buying and getting stocks down to a zero cost basis is what made Buffett a billionaire.
Yeah. So when you have nothing at risk and only something to gain, what's so bad about watching something? So take a company like Pulse Biosciences, which is a stock that we own. We traded it originally from like 7 or 8 up to 15 and back again. It did that a few times. And then a year ago at the January, it went from like 12 to 44. And now it's back down around 3 because they've had some issues.
I paid $267 for some today.
And they're going to do a rights offering. And the gentleman behind this company, Robert Dugan, I knew personally here in Santa Barbara he started a company called Computer Motion that invented the robotic surgical system that's used for non-invasive surgery, intuitive surgical. And that stock went from 3 to like 6,000. And then PCYC, which turned into ABBV. And he's a very, very talented man. and it's been very successful. And he put this company together a few years ago. Incredible people, incredible technology. Um,
Is it more important that you like the people, or is it more important that you like the technology?
it's more important that you like the people. The most important thing in a company is its management. Microsoft had horrible products all through the 80s and 90s, but they had fantastic management. You take some early tech companies, for example, that had really great technology. Where are they today? They're nowhere because they had no management. The reason why Tesla is such a good company is because Musk is an excellent manager. And you can go down the line to see successful founders that are still with their companies. Larry Ellison, for example.
Yeah.
You know, Ballmer and Gates, basically had to leave their company, and because they lost essentially control of it. But um, management is always the key, and that they have enough financing to keep themselves going.
So again, yeah, just for everybody listening, it's important that you know the people, or you at least respect the people, and understand that you're investing in the people, not necessarily the product.
And the best thing that can happen to a growth company over the course of its lifetime, which is it's going to take 5 to 7 years for you to see a multiple 1,000% return on your investment as a company goes from a development stage company to $1 billion a year in sales. And you can look at every single company in the mid-cap exchange or the low end of the big cap exchange, and that's how every one of those companies started, as a development stage company with zero sales. And now they're billion-dollar companies. And that is what, when people say that the market is a zero-sum game, they're out of their minds.
It's not a zero-sum game.
Now, capitalism creates value where there was no value, and it's not because someone lost something that someone got something back. People think that about trading. Say, for example, if you buy a stock at 10 and you hold it for a week, and during that period of time that you hold it for a week, it goes from 10 to 11 to 9 to 10 to 11 to 9 to 10 to 11 to 9, goes back to 10, and you sell it at 10. But I've traded it all up and down during that time frame. Who's lost money? Nobody. I've made money. If you sold at 11, you would have made money. It's not because someone loses money. And the great thing about growth companies is that they're rigged in your favor. And let me explain that. I tell it to people all the time. Is that if you have a company, let's say they're doing 50 million a year in sales and they're growing at 20% a quarter, right? 80% a year, which is a high rate of growth, but that's what you see when companies go from a development stage into a marketing stage, is you see growth rates at that rate. The January effect portfolio that we put together in December, the sort that we started with was they had to have at least 50% quarter over quarter revenue growth, and that the PSR, the price to sales ratio, was 5 or less. Right? And yeah, the stocks. So if you take a growth stock that's growing at these hyper rates and you hold price constant and move time forward, the stock now becomes undervalued because there's, if it's a year later, there's now 20% or 80% more sales, and the price hasn't reflected that.
Hence the I'm sorry to interrupt. Hence the importance of the people, right? Because if the people continue to work correctly.
Managers at their companies, the best motivation to a workforce, especially when they're at that starting to push the envelope and get that company really moving, is to have a bad quarter or have the market perceive that there was something bad in their quarter. Because the next day, those managers are going to be brainstorming with all of their employees as to what's wrong, how to fix it. It's tremendous motivation, which is why typically when you see a company come out and they've just announced a 25% increase in sales, but they missed by a penny, and the stock drops 8%. I mean, that's an incredible opportunity, as opposed, because that stock's going to come back up. You see a stock that, let's say it's the same thing, but they beat by a penny and it goes up 10%. Well, that stock's going to be back down to the level that it went up from within a week or 2 weeks. You know, buy low. And you got to get your mind out of this. Well, God, it can't be good if it's going down. I better stay away, wait for it to go up before I buy it.
Hey, how do people claim to read tape when the tape has got 3,000 quotes a second? For real, like, come on, it can't be done.
Well, you can't read quotes, that's for sure.
Yeah,
So,
no way. Like
if
in
you're
the ring, we could see people make the trades. We knew whose position was where because it all happened right in front of you.
that's
So
right. It depends on what in the tape you're reading.
oh, that's a good question or a good point.
Because there's a lot of information in the tape. And I've often say that, oh, no, you can't read the tape. Well, there's a lot of things that we look at, you cannot look at the tape manually. No
Right,
question.
no way.
The spreads, for example, when people look at SPY and count 1 second, right? Watch one trade go through. We might see the burst monitor might show, like today at let me just scroll down here. Let's find a high quote round. Okay, here at 127.19 on QQQ, there were 3,814 quotes. A quote, folks, is an order that someone has put in an order to buy or sell something. 3,814 of those quotes changed the best bid or offer, right? The best bid is the high bid, the best offer is the low offer. The difference between the two is the spread, right? And the NBBO rules, that's the National Best Bidder Offer, Reg NMS, passed in 2007, says that for a market order, that if you put in a market order to buy or sell a stock, that the trading computers at the various different, like at various different companies that are licensed wholesalers, they have to route your order to the exchange that has the high bid if you're a seller, or to the low offer if you're a buyer. And it's a market order, and then there are normal rules involved. And during that 1 second of time, that NBBO changed 733 times. So that in 1 second. Now, there's no physical way that a human being can perceive that. And if you looked at your tape, at your time in sales, if you're on Thinkorswim or any of the other ones, there were 220 trades during that single second. And if I brought up our 1 second bar charts, you would see that there was probably something like a 3 or 4 cent spread between the high price and the low price of those 220 trades during that 1 second of time, by 3 or 4 cents. Yet when you look at your charts, and you look at that minute, or if you can look at that second, you're not going to see all that data because you physically, those systems can't handle that amount of bandwidth. There's too much information, and they have too many customers to do it. And that's why the data that we buy from the exchanges is so expensive, is because that pipe is enormous. And through Jeff Donovan's genius, we've been able to over the years, continuously upgrade how our systems read that information off of the tape, which makes what we're looking at extremely accurate for what it is it's saying. That doesn't necessarily mean it's predictive about what price is going to do next. That's not the goal. The goal is to understand what price is doing so that we can anticipate the range that it's going to trade, so that we can then see if one of our setups to trade that range is in place. And if it is, then we have a trigger and we can make a trade. And we just sit there and we wait for these things to happen, as opposed to always trying to surf that stock price up and down. We're trying to do that to an extent, but only during very specific points in time. So back to reading the tape.
Right.
So
Right. Like,
there are so many different things that you can look at. The things that then are actionable, okay? Only people that, well, like Anand, like Lucci, for example, right? He
right.
and I both approach the tape from a different perspective, and we both have extremely accurate, actionable information that is repeatable.
Hmm.
And that's what makes it such value. And that's why we want to work with San Lucci, because they're, they're a great company. They've got great people, and they're going to grow a great deal over
The people are smart, no question.
And the key, folks, is to get the user as profitable as quickly as possible and instill into them the skills and the disciplines so that you know when you can put on a trade and you know when you can't. And that's, if you're sitting in front of your computer and you're looked at the screen and sitting there and trying to find something, what we do is so much more relaxing than that. We know basically every day, before the day begins, at the end of every day, we know tomorrow whether we're going to be biased to looking for long setups or we're going to be biased for looking for short setups.
It removes the burden of having to have a feel.
Yeah, that's feelings are certainly repeatable, but they're not measurable.
Right? Like, do feelings are applicable if you're playing music?
Right. And trading, because if you're really scared, it's probably the best time to do the opposite. I know I depend on my stomach. Like today, a lot of people, we're used to looking at these vertical ranges, and then they go boom, 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 like that.
You
Right?
you averaged down this morning.
Twice, because I knew as the range got larger, all I had to do was calculate the most likely area that it was going to bounce back to, which is how we teach people how to draw ranges. But they're always never the absolute high, the absolute low. They're always at a point below.
That's tradable, right? That's tradable.
That's why stock charts go like this. Because you're always looking for that level a little bit below what the prior one was, because you're going to find people trying to get out here. It's like, why would you ever want to put a stop at a whole number? You might as well just get rid of it right now.
Yeah, nice average down. I thought that was well done.
And what gave us the luxury to be able to do that was cycle momentum was like 70 or plus 70, plus 80. It gave us cycle momentum, gives us time to hold against a counter trend move. And we know that when we have a lot of time, we can become more aggressive. And when we have less time, we need to become a lot more conservative or defensive. And that's just like when you're driving down the car, driving down the road, and you can see 3 or 4 headlights in front of you. And you realize that you're coming up to your headlight. You see the walk, don't walk sign is still white, still green.
The stoplight, not the headlight.
Yeah, no, the walk, don't walk sign.
Right.
So if it's flashing don't walk and you're 200 yards from the intersection, pretty much know you're not going to be able to make it through the intersection, right? So there's a visual key that we use every day. Also, so say, for example, in Denver, if you're driving down Colorado Boulevard going west, and I know if somebody's out there in Denver, you're going to know exactly what I'm going to say, is that you can see like 5 or 6 lights ahead of you, and they all turn red and they all turn green at exactly the same time. They are timed to stop you at every single light. There's no way you can get around that unless you do one thing. You got to put yourself 180 degrees or at least 90 degrees out of phase with that cycle. So how do you do that? You do that by pulling over, and let's say if the cycle is 2 minutes long, okay, you wait a third of that period of time and then you start up again. That way you're now out of phase with that, and you can go green all the way through. And when I lived there, I proved and I did that. And I went green all the way through.
World record, right? Never done before.
I have another driving story, but I'll keep that one to myself.
So
Anyway.
let's see. I'm gonna go see this band called Bodega. There's a Bushwick punk band coming up. They're great if anybody gets a chance to catch them on their tour. I'm waiting for your broadcast in your tails. That will look very nice. Did you buy the what's it called with the
batons? No.
No.
I'm gonna call them back. Maybe I get them to ship them out here.
Yeah, for sure, right? Like this is maybe you'll get this as like a side gig. Maybe they'll hire you back.
Well, you know,
And then is your
I don't like trains, so I can't be one of those conductors. And I don't necessarily, I like electricity, but I'd rather not be a conductor for it.
Are you is your music posted on Spotify or anywhere?
No, I've got some links in the chat room to some of the tunes.
Okay, if anybody wants them, they can reach out to Steve via on Twitter if you're not in the chat rooms at HFT Alert and listen to his music.
Yeah, I have this. I'll share the bluegrass tune called "Dead and Gone," which is my curmudgeon manifesto to the world that I wrote in 2013. So it's become even more so.
There's a huge bluegrass festival in Kansas. I think it's in Winfield or something like that. Something field in Kansas. It's bluegrass over the Labor Day weekend. Have you ever been to that?
No, I've been to Branson.
Oh, you have? Where all old singers go?
Well, at the time, it was a really great place. I saw Dolly Parton there. Incredible.
She was cool, right?
Incredible voice. She is cool, yeah.
Do people ever think you look like Clapton?
No.
You kind of look like Clapton. No one's. And so it's been about an hour. So everybody, thank you for coming. This Steve Hammer is a genius trader and even a Mother Teresa of wayward traders.
I just want people to be successful and realize that the market is an incredible opportunity for two things, for profit and entertainment. Don't discount the entertainment value.
He definitely believes in discipline before love. So do not expect a friendly teacher, but he is an effective teacher.
I'm old school.
Yeah. When did you start? You started in Denver, right? Wasn't that like penny stock chop shop stuff?
I worked in a penny stock brokerage firm. Yeah. Richie first at OTC Network. Remember that one?
Yeah.
OTC Net. They still have some companies that are out there. Gentex was a OTC network.
Were the pink sheets really pink?
Oh yeah, they were definitely pink. They're very thin paper. Yeah. And then worked for a company called Richie Frankel and Company. They did oil and gas underwritings. I brought them Clear Channel Communications.
Holy cow.
And they passed on it. Reagan McAllister and Lowry Mays, Red McCombs, those guys. They're all billionaires now.
Yeah, holy mackerel. Yeah, that was like, you know, back in the day where commodities were the black sheep and beyond commodities being the black sheep, the penny stock world in Denver was just like criminal. Or it was, you know, from the guys on the big board, they were just like, no, they didn't even want to deal with San Francisco or Philadelphia.
There was a company called Falcon Energy when fracking started to be a thing. They this stock went from like a dime to $45, and what it was a railroad car that had an old jet engine on it, and it pumped all the hot gas down into the pipe. It turned out to be a big scam, but the were you there on the crash?
In 87. Yeah, I was in the ring. I actually bought the low print. And then they closed the market for a 20-minute or half an hour. But
I remember having to add paper to the bottom of our charts because everything was drawn by hand. And
I
that
have,
was
yeah, I have the point and figure chart that's 10 feet tall.
right.
From
You point to it and try to figure it out. That's right.
Hey,
But
will you come back and we can reminisce and when you feel like it, every Wednesday we have our happy hour.
sure. We can talk about the wire operators.
Oh my God, we can talk about, I mean, the old guys who would just say it's only in the wrist. It's all in the wrist.
That, you know, the Challenger disaster is when comedy on Wall Street ended. I didn't hear a good joke after that.
You know, there was a day where there was a credible UFO sighting when I was first working on the floor in the early 80s, and they started to rally the price of Coca-Cola. True story. And I asked the guys why, and they said because if it's really UFOs, they're going to take all of our Coca-Cola. Humankind's greatest achievement. True story.
Yeah, I remember a lot of them, boy.
So hey, thank you for everything you've taught me. It's been amazing and a complete rewiring of 40 years of thinking. And good luck with the Lucci integration. And please come back, everybody. Steve Hammer, round of applause.
Maybe I'll play guitar next time.
Yeah, can you bring one out?
Yeah, I got some over there.
Yeah, here, bring one out. Just pick up one and show it to us. Everybody, Steve loves guitars, and so I'm sure whatever he's bringing is a beautiful guitar, and well worth the extra minute that we're going to wait to see what he comes back with here.
This is one of my hybrids.
Awesome. Listen to it sound.
So this thing, this is a Fender Performer, and this device here is my this is a MIDI converter. So it digitizes each of the strings. I can use these pickups. Right.
Oh, cool. 2 pickups.
Actually 3. So this thing right here, and then that goes into let's see. That goes into this device. And that
some sort of board.
That is a Roland synthesizer that, see, now it's an acoustic guitar.
Yeah, check that out.
Or I can push this button, turn it into a synthesizer.
Literally a Moog synthesizer, or almost like a keyboard.
So what I do is I have this digital recording studio that I can operate with my feet. It's called a looper board made by Headrock.
Yep.
And it's a 4-track digital studio. So what I can do, I program in a drum loop. I put in the verse portions into 1 track, chorus in another, usually with a bridge in a third. And then I can sequence through them in real time and play leads and sing and stuff. So I'm a one-man.
Right. You're a one-man band. I've seen so many gigs, even big shows in New York, record a chorus track and then loop it through.
Yeah, fun.
Yeah, it's awesome.
I can ad lib here for 2 hours at night.
That's awesome. Thank you. What guitar was that? There was a hybrid Fender?
That's a Fender Performer.
Beautiful, beautiful guitar.
Invented by John Page. They only made 300 of them. I have 3 of them, so I have 1% of Fender guitar. They're very underrated guitar, but they have incredible different tones. I like that. So. All right, Chris. Well, I won't keep you any longer.
Yeah, thank you for coming, and thank you for everything. And hopefully we can do this again. Thank you everybody for coming. Today was April 27th, and the end of a brutal month for everybody. And so I hope everybody survived. Okay. Thank you, Stephen. That was so great.
All right, my pleasure. Good to see you.
Bye.